America is home to 33 million small businesses, the beating heart of communities across the country.
And proof that the American dream is still alive.
This is a show about those dreamers and doers and the communities they serve.
Their real life stories.
Their struggles and successes.
Their grit, determination, and passion.
And the people who fight
to keep their American dream alive.
I'm Alfredo Ortiz.
I'm Elaine Parker.
And it's time for another episode of Main Street Matters,
America's small business megaphone. Hi, everybody, and welcome to another episode of Main Street Matters, America's small business megaphone. I'm Elaine Parker, the president of the Job Creators Network Foundation, and today we're very excited to have Todd Sheets join us. Todd is the author of the free Substack letter on wealth and progress and wrote the book 2008, What Really Happened, where he breaks down the lasting impact of Federal Reserve policy. He's a former investment banker and economist. He's a strong voice for limited government, energy independence, and letting the free market lead the way, especially when it comes to AI and innovation. Todd, welcome to the show.
Thanks so much, Elaine. It's delightful to be with you.
Well, I know we were talking a little bit before we came on about our founder, the late Bernie Marcus. He's a co-founder of the Home Depot. And I love to talk about his story because, you know, he's fired at 48. He went on to start the Home Depot. And he always said in the years after he left the Home Depot and retired, and went on to do philanthropic things that he loved and give back to the country and his community. But he always said that if he had to start the Home Depot, at that time, in like the 2008, 2000, during the Obama administration, he could have never grown. He said he probably would have got to, maybe 20 stores tops. Instead, there's, probably 2,500 to 3,000 stores now. It's international. But he said because of the regulatory and legal environment that was so, detrimental to growing a business. And in essence, he's our founder. We focus on small businesses, but Bernie always saw himself as a small business owner. And that's why he wanted to focus on the small business person, is he understood their story. And I know that you have some thoughts about the Home Depot and the early days of it. Tell us a little bit about what you know.
Yeah, so I always admired them greatly, both as a company. I just liked watching these companies that were founded by people like Bernie or a Sam Walton, who starts out in Arkansas in Bentonville with, a couple little shops, and then they built it up and it's successful and it grows and it grows and grows. And I think it's very important for people to remember that most big businesses that do really well start as small businesses like that, and they find a niche and a consumer demand that isn't being met and a better way to serve people. And that's why they become so big. I mean, we get caught up in these ideas of like these big monopolistic, heartless organizations. But the ones that are successful and stay successful over time, are started with the kind of mentality that you're talking about. The story I always love telling is when I had a young family, we had been living in a villa. We had our first two children. We moved into a small home that we renovated. And, I'm horrible at that kind of thing. If it hadn't been for the local Home Depot, it never would have gotten finished or completed. But the thing that I remember the most is, and this was how they, like at that time, each Home Depot was run like its own local business. And everybody within the store felt that. And the story that I'm leaning towards is we were there one night, late at night at closing time, like 9:00. And we had bought some blinds that we were going to hang, and they wouldn't fit in our car. And the lady who was checking us out, we kind of brought them back in, and she said, "Oh, well, where do you live?" And we kind of said the address, and she said, "Oh, that's not that far. I'm almost done. I'll throw them in the back of my van, and then I'll drop them off at your house on the way home." And she did that. And it was like, you talk about creating loyalty among your customers and that kind of thing. But that was just the whole vibe and the attitude of Home Depot. I mean, that's why they became as big and successful as they did. So, yeah, that's the story I always love to remember.
You're right. He did empower the store managers to run each store like their own business. He actually trained all of the new store managers personally when he was still with the company as CEO, and he really talked about those early days all the time. And I used to travel with him when he would speak around the country in the early days of Job Creators Network, when he was really involved with us and helping to get the word out about, what we were doing for small businesses. And so I'd listen to his early days of his stories and everything. But every time we'd go to a new city, we'd land, and if we drove by a Home Depot, he'd say, "Can we stop at Home Depot on the way back?" And so I remember one time I said, "Sure, would you like me to contact the store manager and let him know you're coming?" And he looked at me and he said, "Now, Elaine, why would you want to do that?" And I started laughing, and I was like, "Okay."
Was that because he wanted to go in and see what it was like without them knowing he was coming, or was that kind of the motivation there? Or
He just wanted to walk in and be a customer and experience Home Depot every time in a new way. And so we would walk in, and I can remember, I think we were in Denver, and we walked in, and he was looking for some kind of light bulb with one of the folks that was with us, and it was a specialty light bulb. And it took a little while for like they have department managers for each, lighting and everything like that. So it took a little while for the department manager to be the one to walk by. But boy, when he did, he was like, he knew exactly who he was. And before you knew it, we were in the back of the store in appliances. And I mean, all of the associates were, around, lining up to shake his hand and talk to him. And he spoke with each one. And what department do you work in? And tell me about, sales and the appliances. And the interesting thing is this is how relatable he was. He would ask them, "What's your biggest challenge?" And I can remember the appliance manager started talking about, "Well, here's what's happening. And, this is why we're not making the numbers this month." And da, 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 da. And I mean, he literally was having like a problem solving conversation right there. Bernie loved it. He loved every second of it. And I went on Twitter afterwards, and they had posted all kinds of pictures, and they just were so excited, and they really loved him. And this was, gosh, 15 years after he had left, being CEO and running the company. So, I mean, these people still know who he is. They still love him. And, when you see all those pins all over those orange aprons, those pins represent somebody who's been there for many, many years.
yeah, it's the point. One of the things that comes to me is, as you're talking about all of that, is not just what these companies do for customers, but what they do for employees, and how they change the lives of these employees who are fortunate enough to become a part of an organization run by somebody like Bernie that grows and grows and grows over time. And, it really helps somebody, find fulfillment in what they get up and do every day, a sense of purpose. And as the company is successful, they're more successful as employees. Many of them get the opportunity to rise up from, maybe they're working in a department, and then they become the head of a department, and then maybe even the head of a store. And, it's not all of the American dream, but it's a huge part of the American dream. And it's so real, and it's so fundamental to what we're all about. And I think it's the thing that I think your organization, companies like Home Depot, and what I'm trying to do with my writing and communications is that type of thing, is just communicate how critical and important it is that we maintain the kind of environment that lets that continue to happen in this country, because it's very, very easy to lose sight of how rare, being in a country or an organization like that is. I mean, it's easy to take for granted and think, oh, well, this just happens everywhere. And there's, all this abundance and there's all this money and there's all these opportunities, but there aren't. You travel around the world today and what we have here is still very unique in spite of all the problems that we have and the mistakes that we've made. Or you look back through history and you start to realize how incredibly rare, being the opportunity to live in a country like this that creates these kinds of opportunities and the spill on effects and benefits of all of that are. So, yeah, I love those kinds of stories because it brings those things home for people and makes them very relatable.
Yeah, he really worried about the future of this country and how we were sliding towards more government control, more socialism. And he worried about the younger people who just seemed to be so drawn to socialistic policies and government control, and instead of working towards economic freedom and what kind of freedom that gave you and the opportunity it gave you to give back. And so that's part of why he wanted to start Job Creators Network, was to focus on small businesses, because that really is the heartbeat of the country. And that's why we have continued on with his vision in talking about how these policies, especially over the last 4 years on the Biden administration, just decimated small businesses, and why it was so important to get the tax cuts extended and made permanent, which thankfully they were. But it just seems to be so many roadblocks. We're sort of, I feel like we're sitting at the starting line, and we've started moving finally, with the tax cuts being made permanent, and even the tariffs are starting to work, and we're leveling the playing field in the tariffs. But we've got the Fed that seems to be, sort of the anchor pulling us back. And it's so frustrating because yet another data point, came out, second quarter GDP, 3%. There's just so many data points that point to cut the rates. And I don't hear anybody saying, here's why you shouldn't cut the rates. The Democrats seem to stay quiet and probably hoping he doesn't cut the rates. But I don't hear anybody say why he's not cutting the rates. I mean, do you know why? Do you have some insight as to what data point he's looking at that says, no, can't cut the rates yet?
Yeah, so this is an area, as you know from programs that we've shared in that kind of thing, I've been very supportive of the Trump administration in general. Most people in the economics community and even in the conservative side of the equation, fought against the tariffs, and they tried to act like, this is going to take us back into the Great Depression and those kinds of things. And that was one of the very first pieces I wrote on Substack, was saying, no, this is misguided. This is fear mongering. All we're trying to do here at one level is level the playing field, which for too long has been stacked against the American worker and that kind of thing. Recently here, I've been writing about artificial intelligence. And this past week, I wrote because I was, excited and thrilled to see that the administration's plan for AI is very much in line with, deregulating and giving us an opportunity to take full advantage of AI, because I truly believe, if we get this right and we handle it the way we have in the past, with a light regulatory structure that doesn't impair the ability and creativity of the innovators and the business starters out there, so that we can keep the lead, it will create far more jobs than it displaces. And it will be like the Industrial Revolution. So I'm saying those two things because in the area of interest rates, I actually, that's one spot where I think I'm not a fan of the current chairman of the Fed. And I'm a huge believer that we need to radically reform the Federal Reserve. But I do think right now, interest rate policy is probably not that far from where it should be. And I think one of the things that's happened over the last 20 to 25 years is that this goes all the way back to the 1990s. and then builds through a major cause of the housing bubble, was we became addicted to the idea that the Fed could push short-term interest rates down, and it would either help us ride through a potential economic hiccup, which there were a few of during the 90s as globalization started taking hold, or then in the early 2000s, they did it again after the tech stock bubble collapsed to try and keep that from becoming too big of an economic problem. They pushed short-term interest rates down to some of the lowest levels we've had in history. And what they didn't realize, and still isn't, I think, well enough understood out there, is that was the second major step to creating the housing bubble that then led to the great financial crisis. And so then, again, because the Fed failed to acknowledge its responsibility for that and hasn't really been held accountable, this is a lot of what my book details. We then got into the Obama years, and the Obama, he pushed up deficit spending to all-time highs. The Fed kind of helped monetize that with low short-term interest rates again. And I think that has actually led us back into a period where we have very high stock prices. We have an affordability issue in housing. And so it's a little bit of a long-winded way of saying we've been through 20 or 25 years of misguided Federal Reserve attempts to stimulate the economy with ultra low interest rates. And if you look at where we are right now, we've got a federal funds rate that's 4.2, 4.3%. The most recent reading on inflation was 2.7%. And I'm a big proponent of simple guiding models are the best. And to me, the best one out there for the Fed is what is the real federal funds rate, which is the federal funds rate minus the current rate or run rate of inflation. And we're at a little over 1.5%, which is maybe high compared to where we've been in the last 10 or 20 years. But I think that fails to recognize the problems that have been created by these ultra low interest rate policies. If we look at a period of time before the Fed's low rates, pushed up the tech stock bubble and led to the collapse, and then the housing bubble, and then more recently the housing affordability issues, what we would find is from the mid 1980s through the late 1990s, the real federal funds rate ran around 2.5%. So we're actually a little bit low by that measure right now. So I agree with Trump, the Fed needs to be reformed. I agree with him that what we want to do is create low interest rates, especially at the medium and longer term end of the spectrum, so that people aren't incentivized into doing too much short-term debt, which is very dangerous. But I just think the way for us to get there is to hold the line and make sure we keep inflation in check, especially at a time when we're running the kind of budget deficits that we're running right now, where we have to be able to go into the marketplace and borrow significant amounts of money. And if we're going to keep interest rates in check, the market has to remain confident that the Fed isn't going to try and monetize all this borrowing, which is the huge mistake that all central banks have made throughout history. And so it's very important that the Fed maintain credibility and hold interest rates at a level that maintain that confidence in the value of the dollar, so that we don't have one of these big run-ups in inflation that then pushes interest rates up really high. So that's a little long-winded, but I believe in the objectives that Trump is pushing for, but I think we need to be very cautious about push too much pressure on them to push short-term rates down, because the dangers of that in this environment are pretty high.
I haven't heard that side of things, which is why I asked. I mean, to me, and I'm not an economist, first to say that always, but on the simplistic side of things, when I look at all the data points, it's in line for a rate cut. And I know our small business owners want it because we've got, the the tax bill that went over the finish line. Immediate expensing is back, 100% immediate expensing. This is the opportunity for these small business owners to invest, buy equipment and expand their businesses, purchase that new delivery truck, and create jobs. And for many of them, taking these loans are still out of their reach. They're just too expensive.
Yeah, I mean, that's very understandable. And those are very understandable objectives. But the big important thing is that we don't let inflation get out of the bag, because that's when we then have to go through a multi-year period of trying to get it back under control. This happened back in the 1970s when the Fed was monetizing budget deficits and inflation took off for the first time, really in a significant way, almost in the history of the country. And, it took a decade to get it back under control at that time. This is also the thing, that, as much as anything else, I think undermined the Biden administration was, they pushed up all the deficit spending, which was unneeded. The COVID recovery had already started. We were out of the recession from COVID when Biden came in office, but they pushed through another big round of spending, and then the Green New Deal and the Fed's low interest rates, and the Fed's predictions were wrong. They said, "Oh, we think this is going to be transitory." Well, it wasn't, and then they had to push interest rates up, and that really undermined the credibility of the administration. And so, I think everybody would like rates to be lower. The best way to ensure we have low rates that in a sustainable way is to hold inflation in check, because the market ultimately sets interest rates. The government can influence them for a short period of time, but ultimately the market sets interest rates, and they will only provide loans at interest rates that they believe will provide a real return over the rate of inflation. And so if you go back and look at these things, it's like, if you're going to make a 10-year loan to somebody, you want to be sure that inflation isn't going to eat away all your returns. So if you make a loan at 3% and inflation runs 3 or 3.5%, well, then you've lost money as a lender. So in order to access credit markets in a big way, from the private sector, which is where, the vast majority of money is, we have to maintain confidence that inflation will be held at low levels. And that's what will really keep interest rates at low levels on a sustainable basis. And so I think we're in one of those periods of time where we need to be very careful about not being too easy on the short-term interest rate side and trying to create things that might come back to bite us longer term here.
How do you want to see the Fed reformed then? Because right now we've got the Fed governors. Finally, we are hearing some dissent within the Fed governors. Is it Chris Waller, I think, is the
Yes.
one Fed governor that has been dissenting. And I read today that they may have some dissent amongst the governors as well. But it doesn't look like there'll be any rate cuts. What do you think the best way to reform the Fed would be, so that we can keep it under control, but yet, allow the investment that I know our small business owners want to make and are unable to?
Yeah, for me, it would be to either eliminate the institution, which isn't going to happen in the short term, or dramatically curtail their ability to manipulate and influence the economy. And one of the things I alluded to the Fed in a piece, a Substack piece a while back, as it's basically become the Committee for Centrally Planned Interest Rates. And so, we have an economy that's run on the idea of markets and market signals and market price signals being the best mechanism for allocating capital and allocating resources throughout the system. And all of history demonstrates that is far superior to any form of kind of, government manipulation of different areas of the economy and that kind of thing. There is a need for light touch of regulation, and we do need laws and rules and those kinds of things. But all of economic history shows that. Unfortunately, we've evolved into a place where we have a small body of people on the Fed, led by the Fed chairman, who really is the decision maker, who decides what short-term interest rates are going to be, and that influences everything throughout the economy. So what I would be in favor of on a short-term basis is that we try and find a way to eliminate their ability to do that, except in cases of emergency, which is like what we were in, which is what they were originally created for. They failed in the job. They were originally created to provide what they called an elastic currency, which was to be able to expand the currency in the time of an isolated bank panic in order to keep a bank panic from spreading. But they failed to do their job during the Depression, which was the primary cause of the Great Depression. And because they had failed, FDR put deposit insurance in place, which effectively did the job the Fed had been created to do, which left the Fed either to wither away or to mandate, some other mission for itself, which it effectively did over time. And over time, it's expanded to the point where they're trying to tinker with short-term interest rates to accomplish all kinds of objectives that we should not be allocating to a small body of people. We should, and so what I'm in favor of is dramatically curtailing their responsibilities, forcing them to consider all of the different economic implications that are involved when they set short-term interest rates, including the risk of creating asset bubbles, not just inflation and unemployment, and finding a way so that short-term interest rates are set in the marketplace and not by a small body of 12 people headed by one person, we have all these political issues that result from that.
Well, how do you see the tariffs playing into this? Because there was this in April when the president announced all the tariffs, the doomsday came of, we're going to go into a recession and we're going to have massive inflation. And we haven't seen that. And we've seen actually for the first time a surplus in the deficit. And, and I want to say it's multiple decades since we've had that. Last month, a surplus. How did the tariffs play into this? We're not seeing the inflation that was anticipated. The economy didn't fall off a cliff. So what is your take on the tariffs and where we're going? We're seeing countries accept higher base rates. We're getting zero or near zero tariffs with those countries on these deals that are coming in. And yet the media is still kind of poo-pooing the tariffs and saying these are bad deals.
Yeah, look, I think Trump has done a phenomenal job with the tariffs. And I had just started the Substack piece, and it was one of the first pieces that I wrote was, the Wall Street Journal had come out with this editorial that was talking about Smoot-Hawley, which conjures up the idea of the Great Depression and that this could push us into a trade war that's going to cause another depression. Well, first of all, as we've just alluded to, that was not what's caused the Great Depression. And to allude to it and scare people with something like that, is just inappropriate. But I think that Trump was right about the tariffs, because we got ourselves into a situation after World War II where we had a significantly unbalanced playing field, even with our friends and allies. And so, one of the things I've mentioned a number of different times is people keep saying, oh, I'm for free trade, so I'm against what Trump's doing with tariffs. Well, how can you tell me that Europe charging 10% tariffs on our autos while we charge them something like 2% is free and balanced trade? It's not. And the Trump administration has been correct. It's not just tariff levels. There's all kinds of other restrictions on doing business in other countries. A place like Japan is an ally of ours, but we all know that they operate under an economic system which makes it almost impossible for somebody from the outside to come in and sell into Japan. So it's tariff levels and other things, and the administration's been right about these things. So I'm a big supporter of what they've done with the tariffs. And I think the fact, I pointed out in that first piece, let's take a breath here and not get caught up in the idea that we're headed into the Great Depression or a sustained market crash. This thing is likely to settle at a much more balanced level, and the Trump administration has been correct about those kinds of things. I also think the Federal Reserve made a huge mistake. I think Powell made a big mistake last year in lowering the federal funds rate prematurely before inflation had really come all the way down to the 2% level that they've targeted. And some people have said, well, that was politics, whether it was or not, who knows. But it was a mistake for them to lower rates last fall. And then when the tariffs came up, then he quickly shifted the messaging and started talking about, oh, well, I'm afraid of the inflationary consequences of tariffs. And he started shifting it onto the administration. And I think he probably triggered some of this pushback from the administration by doing that. They should have just kept their mouths shut about tariffs or said, look, we're going to wait and see how the data comes in and see how it affects things. Because at that time, nobody knew exactly, what impact the tariffs would have on the inflation side. If they have an impact, it's more likely to be a short-term or maybe a one-time kind of thing than it is a sustained kind of thing. Milton Friedman said, inflation is always and everywhere a monetary problem, which means sustained rates of high inflation are not the result of a one-time change in the tariffs, although that could cause a short-term adjustment, but they're caused by the Federal Reserve printing money at a rate that is faster than the economy is growing at over sustained periods. So I think it was a big mistake for Powell to start using tariffs, as an excuse. And he should have just said, hey, we're going to watch and see what happens with tariffs. We're also monitoring what's happening with inflation. It's not down to where we want it to be. And until it is, we're going to kind of hold rates at these levels. That would have been a much better response from the Fed chairman.
What does a win look like in a tariff policy with China?
Yeah, I'm glad you mentioned that. That's the other big thing. I think we needed to reset the trading relationships with our friends and allies so that we're closer to a level playing field, which I think that we're in the process of seeing that happen, especially with these recent announcements with Europe and Japan. With respect to China and the people who don't fall in the category of the friends and allies, this would be China, Russia, North Korea as kind of the obvious ones. I think the ideal thing is that we are, especially with China, where we already are so deeply embedded with them and have so many relationships that are intertwined there, we're stair-stepping our way towards higher and higher rates of tariffs that help to isolate the authoritarian, hostile regimes, who are out there against American interest. So if we could do it, I think it would be great to go to a very high level of tariff that shut down that relationship. But I think it's clear that that's going to cause too much disruption for American businesses, small businesses, big businesses, and everybody. Mm-hmm. They've become too dependent on that. So I think, where we are right now, if it stays with where the last, the results were from the last time we completed discussions and negotiations with them, we were close to a 50% level, which would be a pretty big increase from where we've been. The first Trump administration took it up to about 20%. I think if we can take it up meaningfully from that 20% level again, which will encourage businesses to further diversify their supply chains and move away from China. I think that's great. And it continues us down this path of isolating the Chinese economy. What I'd like to see happen over time is we isolate them in a way that we did the Soviet Union during the Cold War, which ultimately allowed us to win the Cold War without having to go into a real confrontation with them. So I think that's really the key to dealing with China.
Well, I know you have no shortage of things to write about in your Substack newsletter on these pressing issues that I think the American people are tuning into probably for the first time in a long time. Because I don't think a lot of people knew that Trump did implement tariffs in his first term. Now they're paying attention. I actually think the word tariff is talked about at kitchen tables across the country based on what I read in the news. Tell everyone how they can find your Substack letter and subscribe to it.
Yeah, so it's if they go to substack.com and search for Todd Sheets on Wealth and Progress, they'll find it, and it is free of charge. And I'm also putting out a very brief weekly podcast now that basically provides the same information in an audio format for people who'd rather listen to it in the car or at the gym or something like that. They're usually about 15 minutes long. You can find those on either YouTube or Spotify or Apple Music, their program as well. So.
Well, that's fantastic. Well, Todd, thank you so much for taking the time to join us on Main Street Matters, America's small business megaphone. And thank you all for taking the time to tune in. Main Street Matters is part of the Salem Podcast Network. New episodes debut every Wednesday and Friday. You can subscribe to the show anywhere you get your podcast from, and we will be back soon with another episode. Bye for now.